Alli, do you think that's going to happen, that yields are going to reach a certain pain threshold? I mean, we've seen the seesaw action this week in the equity market, particularly for some of those tech and growth and momentum names, given what we've seen going on in the Treasury market. And there seems to be this debate about whether we've sort of hit a key technical level and we're going to stay here for a while in terms of yields, or whether we could go higher.
I do think, to the conversation that has happened earlier before I came on, that, yeah, there is going to be some movement up in rates. And I think to a certain extent, the market has priced that in. I think the issue continues to be, as you said, the seesaw. There are two stories. Story one is, you know, are we back in work from home, stay-at-home stocks versus reopening stocks? And story two is the movement up in treasuries that, yes, we do think is going to continue. Is that prognosticating amazing synchronized growth, or rather is that saying that inflation is there? Again, to the points that have been said, the answer is yes for both, but it doesn't necessarily mean it's bad for stocks, right? So in the periods that you've seen over the last 20 years, when yields have gone up, and gone up much more precipitously than we are expecting to see in the next year or two, you have still had stock markets that overperform. So the other two things I would add is to exactly what Mike Santoli said, which was right on. In addition to the two bullish, the checks and the vaccine milestones, you had two other things happen this week. You had a CPI reading that was below expectations, which is what we think is moving Treasury yields up. And you had a Treasury issuance that people were really concerned about, would the market buy at that yield? And there was no problem. So all of these things, to me, continue to point to bullish uptrends. And that's actually why recently our investment bank went up from a 4,100 end-of-year target in the S&P to a 4,250 target.
Shepard Smith here. Thanks for watching CNBC on YouTube.